Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 5th, 2025, and we're diving into Assurant's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Assurant has delivered a robust set of results this quarter, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Assurant reported total revenues of $3.23 billion for Q3 2025. This is a significant increase from the previous year. John, can you walk us through the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by strong performance in the global lifestyle and global housing segments. Net earned premiums, fees, and other income from these segments totaled $3.11 billion, up 9% from last year. This was supported by growth in mobile protection and trade-in programs, as well as higher premiums in lender-placed insurance.
And what about profitability?
Assurant's GAAP net income nearly doubled to $265.6 million, a 99% increase year over year. The adjusted earnings per share came in at $5.73, significantly beating the analyst forecast of $4.23. This impressive profitability was driven by lower reportable catastrophes and strong operational performance across key segments.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did global lifestyle and global housing fare this quarter?
The global lifestyle segment reported an adjusted EBITDA of $206.8 million, up 12% from last year. This was fueled by double-digit earnings growth in connected living and global automotive. Meanwhile, global housing saw a remarkable 177% increase in adjusted EBITDA to $256.3 million, largely due to lower catastrophe losses and favorable non-catastrophe loss experience.
What about the corporate and other segment?
The corporate and other segment reported an adjusted EBITDA loss of $31.6 million, slightly higher than last year. This was primarily due to lower investment income. However, the overall strong performance in the other segments more than offset this loss.
EPS forecast and analyst expectations. Assurant's adjusted earnings per share of $5.73 significantly exceeded the forecasted EPS of $4.23, which was based on estimates from 4 analysts. John, what does this tell us about the company's performance?
This substantial beat indicates that Assurant is executing its strategy effectively, surpassing market expectations. The company's focus on innovation and customer experience, coupled with disciplined execution, has clearly paid off. This performance also reflects strong operational efficiencies and strategic initiatives that have bolstered their bottom line.
Future outlook and strategic plans. Looking ahead, Assurant has increased its full-year outlook. What are the key highlights of their strategic plans for the rest of 2025?
Assurant expects low double-digit growth in adjusted EPS and nearly 10% growth in adjusted EBITDA, excluding catastrophes. They plan to repurchase $300 million worth of shares, which is at the top of their expected range. This reflects their confidence in generating strong cash flows and delivering long-term shareholder value.
How does the company plan to achieve these targets?
The company aims to maintain a strong financial position, support business growth through investments and M&A, and return capital to shareholders. They are also focusing on enhancing capabilities and investing in their workforce to drive future success.